Hello everyone, welcome. I'm Terry Ryder, founder of Hotspotting, and today I'm joined by two notable property experts to discuss Melbourne's next boom with a particular focus on a specific growth corridor. This discussion is happening at a time when there is growing interest in Melbourne and Victoria as an opportunity to buy well ahead of the next phase of growth. And we've just seen the release of new price data showing signs of uplift in prices for Melbourne and for regional Victoria. So tell us more about that. My guests today are experienced property analysts from the investment advisory Reventime, the CEO, Chris Christofi, and the COO, Zen Christofi. Gentlemen, welcome.
Thank you very much for having us, Terry.
Thanks, Terry.
It seems to me this webinar is pretty well timed, just given the release this week of the new price data from both PropTrack and CoreLogic, suggesting a return to growth for Melbourne and also regional Victoria might be imminent.
Definitely. I think the media sort of pushing back to looking at Melbourne as a hotspot for investing has been something that's sort of been in the works probably for the past 6 to 9 months, but I think it's a bit more front of mind now than what it has been in recent times as well, which has been good.
Seems to me it presents people are starting to see Melbourne as a real opportunity. If you look at the median house prices for the major cities, Melbourne's actually fourth behind obviously Sydney, but also behind Canberra and Brisbane, and pretty much on a par with Adelaide and Perth at the moment, because it hasn't had in the last couple of years the growth that we've seen in those, particularly those smaller capital cities. And I think more and more people are starting to look at Melbourne and say this is really good value for money.
Yeah, we're finding that too, and obviously it's great timing just on the back of the interest rates going down after many years as well. So the buyer sentiment is very, very high, and we are finding a lot of investors are talking Victoria. As you know, as we always talk about, property markets are cyclical, and we are now seeing that it's at that ripe 9 o'clock about to boom once again in Victoria, regional Victoria, and specifically we're going to talk about today as well. So there's some great opportunities there.
Yeah, and today we are going to talk about a specific growth corridor, which kind of connects Greater Melbourne to regional Victoria. I'm never quite sure how to classify this particular location. Mitchell Shire, in fact, we're talking about whether it's part of Melbourne or whether it's regional Victoria. It doesn't matter. What we do know, it's an amazing growth area, one of the most, in terms of population growth and projected population growth, one of the big growth regions in all of Australia.
I think following on that as well, the connectivity between the Mitchell Shire now into the CBD, but also towards regional Victoria as well, is going to be very solid over the course of the next decade. So it's only going to attract more and more buyers into that market as well.
Okay, so Sin and Chris are going to take us through a presentation on the area that we're discussing. I just remind everybody that if you have any questions for us, we will allow time at the end of today's broadcast for your questions, which you can feed to us by typing into the Q&A panel you should see in front of you, or the chat box. So either one is good enough. Just pop your questions in there. We'll do our best to answer as many questions as we can.
Sorry there, Terry. Could you hear that in the background?
Could see the visuals, but not the audio.
We will apologize in advance if there is any tech issues. There is two brothers. We're both terrible in tech, but I do want to reassure everybody we have been in the game for a collective 50 years and have done over 5,000 property deals. So our strength does not lie in tech. It does lie in analyzing data, helping people get into the property market and build their wealth. So please stay patient with that point. I do have my brother beside me who's equally as bad as tech as I am.
Okay. So the expertise is in real estate, not technology, but that's where it's important.
Definitely, definitely.
Glad that you put that disclaimer out there, Chris, just so the viewers are fully aware of our abilities when it comes to tech.
We all have our strengths.
That's correct, and we try and stick to those here at Reventime. We do have an IT department which looks after some of our weaker areas.
We definitely do.
Okay, so we are going to talk a little bit today, obviously, about the Mitchell Shire. We're going to talk about the Northern Growth Corridor of Melbourne. So we're going to go into a bit of a presentation for you guys. Obviously, we'll have some time at the end of the presentation for some questions. but we do hope that the audience can find it informative, and as Terry and Chris alluded to, we'll address any questions that we may have towards the end of the presentation, and there'll be an opportunity to get some information about the Shire and about our presentation towards the end as well. So we hope you find today's session informative. So the Northern Corridor of Melbourne, Mitchell Shire, it's obviously primed for a real estate boom. It's driven by obviously its strategic location, infrastructure development, population growth, and increased housing demand. So the region offers promising opportunities for capital growth and rental yield. And when we talk about promising opportunities for capital growth and rental yield, there's a few things here at Reventon that we like to help us with determining what will help with capital growth over a period of time. And we sort of stick to a formula that talks about population, infrastructure, employment, and diversity. So we will cover some of those topics today. And yeah, I'll head over to Chris, and he can go through a little bit about that as well.
Yeah, so obviously a little bit about Reventon as well. We're about to celebrate our 20 years in business. 21st of March 2005 is when we started. We've been doing this for a very, very long time. We've helped over 10,000 clients. Me and my brother collectively have helped 5,500 clients get into the property market. And we've helped countless people build their wealth through real estate. So as Zen was mentioning, some of the key things that we look for when we go into any growth area all across the country is a formula called PIDE, which stands for population. What's the population growth? Now, Terry mentioned the Shire is obviously growing exponentially. So by the year 2030, there'll be over 100,000 people living there, which means if more people move into an area, you're going to have more jobs going in the area, more infrastructure, which is the I out of the PIDE, infrastructure, to be able to support those people. Employment, what sort of jobs and how easy is it for people to get employment? And the third part is diversity of employment. So if we can go back many years ago when we were looking at, well, people were looking at Perth, and it was solely driven by mining, it was underpinned by one thing. So when we go into a specific area, now recently we've been selling in Perth, there was a lot of other things that are underpinning there. More diversity in employment, so not one sector, whether that be mining, whether that be construction, whether that be health, what's creating employment, and is there a diversity in employment, which is very, very important when it comes to looking at real estate. Now, with all the data that you were doing, Terry, we always talk about the differences in employment and diversity. And what can you add to what I just said in relation to the employment there?
Yeah, look, I think it's one of the most important points of all. We believe real estate is local in nature, and real estate markets arise out of local economies. And as you've just alluded to, we emphasise strong, diverse economies. The most important term is diverse, and that's one of the things we love about Mitchell Shire, because it's got a strong agricultural economy. It's got a lot of tourism. It's got manufacturing. It's got one of the biggest military bases in Australia. It's got alternative energy developments, and it's also got a slice of the Inland Rail Link, which is the biggest national infrastructure project currently happening in Australia, $31 billion project connecting Melbourne to Brisbane ultimately. So it's got all that diversity and strength, and as well as its proximity to Melbourne, particularly those big job nodes in the north of Greater Melbourne. So that means that very strong demand from people to rent and buy properties in this area is going to be almost inevitable.
So in terms of the population growth, then we discussed it.
Yep. In 2021, just short of 50,000 people in the Shire. By 2031, so 10 years on, for the population to double, obviously is a significant amount. So a huge demand for housing in the area over the course of the next 5 to 6 years. And projections looking into 2041 have close to 180,000 people in the area. There will be a significant demand for not only housing, there'll be a demand for a lot of different infrastructure projects throughout the area as well. So a lot of different employment opportunities that will open up in that as well. So we see the Shire as now a great opportunity to sort of get in as that population is growing and as the housing demands start to increase as well. So again, looking at the pied formula, ticking the box for population is a big one there as well.
I think that's massive though. If we look at now, within 15 years, we'll go from 50,000, more than 3.5x, close to 180,000 people. That's a lot of new dwellings that need to be created. So when we talk about infrastructure, when we talk about population, these are the forward indicators that are so exciting for investors, that are so exciting when it comes to real estate, because all these things are good key factors that are primed for growth. So that is actually massive that it's going to grow by that much.
Gentlemen, I don't think I've ever seen population projections quite as stark as that right throughout Australia. I mean, there's plenty of locations that are projected to show strong population growth, but to have like population tripling in that short period of time, as is projected, and is already happening. We know it's realistic because of the growth that's already happening there right now. That's almost unprecedented across Australia for that level of uplift.
Can I ask you, Terry, because you've been doing this for so long as well, that is, and I don't want to just skim past that, 3.5x population in like a 15, 16-year period. You said you've never seen anything like that. That would be such an exciting prospect for our future growth for our investors, wouldn't it?
Yeah, absolutely. And I mean, it's a product, the fact that Melbourne, according to some measures, is now our largest city, our largest metropolitan area. And the growth has to go somewhere. And in Melbourne, a lot of it goes north, heading towards some of those other strong regional cities that exist in regional Victoria. It's got land for growth. It's got the transport connections, which are really important. There's major jobs nodes up in the north of Melbourne. So it's got what it needs to support that level of growth. Not every area has that.
Definitely.
No problem. So yeah, just to touch a little bit on that, and obviously talking about still on topic with the population and the housing demand, as we spoke about before, it's going to be a huge demand up by 2040, rapid migration into the area as well. So the Northern Corridor, it's experiencing significant population growth, and new housing developments and improved amenities will attract a lot of different people into the area as well. So we're expecting a big increase in demand in residential properties throughout there as well. So the surge of population in Victoria, the government's aiming to put up about 180,000 homes. I know that's, Terry, you've spoken about this a number of times. It's obviously a very ambitious goal to get up 180,000 new homes in one state. They are falling behind in the majority of states across Australia, but to have a projection to sort of put up 180,000 homes just in our state here of Victoria. What are your thoughts on that, Terry, and how do you foresee that happening? Are we going to get close to that, or
how does it play out for our investors as well? More importantly, do you feel?
Yeah, look, I think this is the crux of the opportunity here. The demand is there, we know that, but the ability of the industry to meet that demand by supplying the level of new homes that are required, it's just not there. The industry doesn't have the capacity. It's for a whole host of reasons. There's a recent report from the Productivity Commission showing that the industry is not as productive as it used to be for all kinds of reasons. So what that means in one word is shortage. That's the problem that exists across Australia. But this region is going to suffer from it more than most. The desire is there to provide the number of new homes, but the capacity can't match it. So anyone who is able to get a slice of the action, buy an existing property or build a new home, is going to benefit from the inevitable uplift in values that will come from that imbalance between supply and demand.
And I think that's a good point, because if you're looking at the pressure that's going to put on the housing market, but also the rental prices will go up because the demand will be so high. So for investors getting into the market and not enough houses being built, and also not enough tenants renting those houses, it actually creates such a great opportunity for not only capital growth, but also for a very, very strong rental yield as well.
Yeah. Against the background that there's a very high level of affordability in this area. I'm sure you'll come to this point later in your presentation, but compared to most parts of the greater Melbourne area, you can buy houses a lot more affordably in this region.
Yeah, and Terry, I understand it was only a couple of weeks back where you sat down with some politicians and you were discussing supply of homes and things like that, and maybe different incentives that the governments would be looking at to assist new purchasers to get into the market. How did the discussions go there, and do you think that they're heading in the right direction, or what were your thoughts on that?
Well, the discussion we had in that panel was with Michael Suker, who's the shadow federal housing minister, a man who will hope to be housing minister in a few months, depending on how the upcoming federal election goes. So it really depends on the outcome of that election. The existing government, both federal government and recently the state government of Victoria, have expressed the desire to build a high level of new homes, but it's a question of facilitating the circumstances so the building industry can actually do that. One of the problems that we have is that for various reasons, we had a lot of a high attrition rate in the building industry last year. About 9 per day on average across Australia went broke and ceased to exist in the industry. That's just adding to the problem that the industry is unable to supply the level of homes that are needed. The will is there, but the capacity at the moment is not there.
So all that pressure just further adds to the prices, delivery times on the properties as well, taking longer. But I guess all these are good signs for investors that are getting into the market in the right areas.
Yeah, absolutely.
So just as we always mentioned, we talk about infrastructure equals future growth. Infrastructure, one of the best things about it is it creates jobs and it creates a lot of opportunity for regional areas. So the Northern Corridor outlines development key infrastructure, which has transport links. So we're going to talk about later on in the presentation all the sectors that it's very, very powerful and all the infrastructure is being spent. Now, the main part of the infrastructure being spent, it creates jobs, it creates supply, and it creates demand. So I think that's a very, very good thing. The Mitchell High is benefiting from significant infrastructure projects, which include schools, shopping centres, transport links, which you mentioned that before as well, the expansion of train stations as well, and the sporting. I know the Melbourne Victory, which we'll talk about a bit later, is building a stadium there for $31 million. So there's a lot of things that are getting put there, which will create jobs, but also help in terms for their future growth.
And as Terry was touching on previously, the Inland Rail, $35 billion project headed up by the federal government is under construction. That obviously will help ease congestion on our roads with freight moving all the way up to Queensland as well. But I think the base of that is actually in the Mitchell Shire, and the land area that will take up is significant. So you can imagine the jobs that will be supplied by a big development like that. That's not only backed by local government, by federal government as well.
But also too, like you spoke about it before too, the connectivity between these areas as well makes it a big difference. Now we talk about the Hume Highway, $300 million infrastructure being spent there. The connectivity between these places makes it a much more desirable place to live, and it makes it much better when it comes to real estate. Creating 30,000 new jobs, which is very, very big, obviously, for the place, and 35 million for the Melbourne Victory, which I mentioned before.
And just talking about the Merrifield Business Park as well, the workforce catchment there is going to be over 500,000 people. So that is a significant catchment in the workforce as well. So another great initiative in the Mitchell Shire as well. And as you spoke about,
I think that's an incredibly important point. Proximity to big employment nodes is so important. Now, a lot of people might look at the area we're talking about and say, well, that's a long way from the Melbourne CBD. And my response always is, well, Melbourne CBD is irrelevant to most people that don't work there. Where they do work is in places like the Merrifield Business Park. That's a $1.2 billion development that's currently under construction. And it's one amongst many. I mean, there's huge other examples along that the northern fringe of Greater Melbourne. Big employment. There's lots of big sort of warehousing and logistics firms with lots of jobs. And it's proximity to that that's important to people. They want to live close to where they're working. And there's more jobs in those sorts of jobs nodes than there are in the CBD of Melbourne. So the area offers not only affordability and connectivity, but it's also got jobs on the doorstep.
So it's self-sustainable.
Yeah, absolutely. It's not
and
like
it's also easier to find tenants as well, because a lot of people are working in the area where they want to live.
Absolutely. It's not like people are going to be jumping on a train and traveling to the centre of Melbourne every day to work. They'll be working in this area, this part of northern Melbourne.
Definitely.
So some of the facilities as well that they're putting in, obviously with a lot of new schools going in there, a lot of different shopping centres going in there. Melbourne Victory heading up a new development, $35 million arena there, which will help with their women's program, also with the youth development programs as well, is attracting families sort of into that area, knowing that, okay, we don't have to, as Terry was saying, we don't need to travel to the CBD to find work when there's so much work and diversity of employment just in the Shire that we're in as well.
Now, as we mentioned before, jobs is a key point. And just between the freight transport and the Merrifield Business Park, there's 50,000 jobs being created. So that's a lot of work. And the Melbourne Victory campus. So if you're looking at the different sectors which that represents, it's very, very strong when it comes to construction, manufacturing, health, retail. So all of these jobs are being created in that area, which will once again further help the property prices go up.
And diversity in employment there, just having a look at that chart and seeing that there's so much diversity in employment at the moment, and there's still so much construction to be done, obviously with the different projects that are going into the Shire. That's going to continue to, that diversity will continue to grow with employment, and they'll obviously have a larger percentage of people going into the retail area, into obviously a lot of work in construction, education, training facilities and things like that as well. But yeah, manufacturing also be a big one there as well.
So obviously represented across 6 different factors makes it very, very diverse. When you're going into a specific area like this, Terry, when you're talking about diversity, obviously 6 different sectors is a very strong one, isn't it?
Absolutely. And I just did a broadcast the other day warning people about avoiding areas that have got just one major sector. Some locations that might look attractive are just about the mining sector, or they're just about tourism, or they're just about agriculture. Those sorts of locations are vulnerable to downturn in that one sector that sustains the local economy and therefore the local property market. And when you've got an area like this, when there's 6 or 7 major sectors providing employment fairly evenly spread across those sectors, then you've got the sort of strength and diversity that we find very attractive as a place that we're comfortable to recommend.
And obviously things change, as we said. I remember many years ago, Terry, when we were talking about mining and we were talking about Perth, and it was what we thought back then was a one-trick pony, but then we started selling in Perth years ago because of the same thing happening. It was a lot more diverse. There was a lot more different industries there. So I think that definitely represents this in the Northern Corridor here.
I think understanding that market cycles are cyclical. They are going to change. Different employment within an area definitely helps that as well. And, you know, a lot of people have been talking about areas such as Perth, like 3 or 4 years ago when we were looking at putting clients into those areas and where is the next. A lot of people this year, I know at the start of the year, there was a lot of discussion with a lot of our clients, with our representatives here as well. Where is the next Perth? What's the next area that's going to see the same sort of thing happening? But in a country like Australia, when it comes to property investment, there are so many different areas that are showing diverse employment. So finding those areas, obviously the research and data can assist you with that. But we've seen areas like Queensland, regional Victoria, see significant growth because of different industries of employment as well. And yeah, as we're alluding to today, we definitely feel that the Mitchell Shire is ticking a lot of those boxes as well.
And I think it's important, Terry. I don't know how many times I've heard you say this, that you got to look at the sub-markets and look at different areas, because the average is just the average. It's just that. There's certain areas that are primed for growth that have good forward indicators, which is what we're seeing here from the Northern Corridor. So I think it's important to look at all the data, but look at the macros of the data as well.
Yeah, absolutely. We believe in location as the key factor, but property market's very local in nature. We keep saying that to people. You might look at the broad figures for Melbourne or for Sydney, and it looks like there hasn't been a lot of price growth. But when you look behind those figures into local areas like this one, you see that there's been much better performance recently. And the various towns that make up, the main towns that make up Mitchell Shire, there has actually been a level of price growth in the last 12 months, whereas at Melbourne, perhaps down a couple, 2 or 3%, but the towns of Mitchell Shire have actually delivered some moderate growth. So it's running to the beat of its own drum. It's a separate area with its own economy. Its proximity to Melbourne is important, but it's very much about what's happening locally with that diverse economy, the population growth, and the infrastructure spend, all important factors.
Yeah, I was listening to a podcast on the way in to work this morning, obviously talking about Melbourne and Victoria over the course of the last sort of 2 or 3 years, and how there had been some areas that haven't performed as so well as opposed to what they've done previously in the last decade. But the sentiment is that there will be a change, but understanding that there are markets within markets and
Sub-markets.
yeah. So we feel that we are going to see some good growth in those areas as well.
And we've spoke about it briefly, but obviously we do feel the rates, there's going to be more pressure being lifted off rates. They're going to come down a few more times as well, which the buyer sentiment will increase further. And I do think that's actually helped our first rate reduction in over 4 years. I think is really a good sign for things to come as well. So I think it's a perfect storm in Victoria now to buy real estate in certain areas.
And there's big impetus behind these areas from the state and federal governments. There's an urgency in some of the recent announcements to actually start getting to work supplying the new homes that are needed to keep up with the population growth. And so there's that behind it as well.
Now, you mentioned as well before, and I think it's a very important point, $31 billion construction inland from the federal government. That is a massive, massive tick, which is definitely going to help the growth along the way, and 80 infrastructure projects in the pipeline for 2025. So they're going to be very, very busy when it comes to infrastructure and investment in this area.
Yeah. And as regards the Inland Rail Link, as I said earlier, the biggest national infrastructure project in the country at the moment. They're actually now building that section because it's a very long link from Melbourne to Brisbane, but they're actually right now building the section that runs from Beveridge, which is one of the towns of Mitchell Shire, to Albury at the border with New South Wales. So that section is now, so that's generating a lot of jobs and economic activity in Mitchell Shire right now, and that all translates into demand for real estate. We've actually seen along the route of the Inland Rail Link in different parts through New South Wales, whenever they've been actually constructing sections of track for this project, there's been a big uplift in the property market in those areas.
Yeah, we've done a little bit of work in that sort of Albury-Wodonga area in the past sort of 6 to 9 months.
Yeah,
probably over 12 months now that we've actually been working in those areas as well. And we have seen some significant growth in those areas, obviously with a lot of employment going into those areas as well. So you do see how the growth does follow infrastructure as well. And I know at Hotspotting, you always talk about following the infrastructure to find where the growth will be. But if you look at it through different periods, you see why there is a certain amount of growth in those areas as well. So it sounds like basic fundamentals, but if you do follow those basic fundamentals, most of the times you'll be right as opposed to the other way around.
So I guess it's like you said, following the infrastructure, you always refer to them the forward indicators. What's going to happen in an area? Why is the infrastructure being spent there? That's obviously going to create jobs. That's going to create demand. That's obviously showing a very, very strong case of all the things we discussed before. It definitely ticks the population growth box, infrastructure. It's definitely got employment, and it's definitely diverse, which makes it a very, very good proposition. And as Zen mentioned too, Aubrey, you're talking about great affordable properties in these areas, which is why our clients have seen great growth in these areas, because they're affordable, they're making a good rental return, and they're easier to get into the market, easier than these other capital cities, obviously.
No problem. So just to touch on a few things just about affordability, as Chris, you were just noting there just a moment ago, and growth potential. We did speak about it at the start of the presentation, but the median prices in those areas are both affordable compared to some of the other inner Melbourne suburbs as well. So we believe that those prices will remain there for some time, and it will allow our investors to sort of get into the market at the right time. The yields are quite high compared to some of the other suburbs in Victoria as well, so up at around that 4.5% on average for our yields. Again, a little higher than some of the inner suburbs in Melbourne as well, because of purchase prices in different areas in the inner suburbs. And we believe that the corridor offers the values will be increasing, reflecting both the affordability and growth potential in those areas as well.
And I think, like as Zen said, being the fact that it's an affordable investment property that has high rental yields and maximum tax efficiency, because we are looking at new builds, makes it a very, very good proposition for our clients to get into the market, to create, build, and protect their wealth through getting the right properties in the right locations. Yep.
So over the next 5 years, with ongoing infrastructure projects, government incentives, the region's poised for continued growth, anticipated interest rate cuts, again, we believe will help with some movement in the market as well, and will further boost demand and values up as well. So we talk about the Mitchell side ticking a lot of the boxes that we look for here at Reventon, and whether it's looking at constructing properties or looking at established properties is something that we do here at Reventon as well, and we've been able to have a lot of success in both of those areas especially over the course of the last sort of 24 months, looking at different areas as we had to sort of navigate through a number of different rate rises. We seem to be at the end of those now. We've got our first rate cut, which we believe will again ignite some investors to start thinking about getting back into the market. And if we see further interest rate cuts, and we know generally the first interest rate cut is not going to give people as much confidence as once they see 2 or 3 interest rate cuts, and it does take some time for them to feel some of the relief of those interest rate cuts. And I think people over the past 2 or 3 years have really understood a lot more about their budgeting than what they've had to previously, because of the environment that we have been in, and it will take them some time and to sort of adjust their mindset to say, okay, we've seen some saving here, what can we actually do with that saving? And I know myself personally, speaking to a lot of clients over the course of the last year, when they were talking about, is there going to be any relief with rate cuts and things like that as well? My conversations with clients were always about, if there is relief with interest rate cuts and you have some saving and there's some less pressure to run the household, that additional money that you're going to have left over, what's the plans for that additional money? What are you hoping to be able to do with that? And I think if people can understand that there is going to be some rate relief, which will mean some additional income within a household, what are you actually doing with that additional income? Are you using that to help build your wealth? Are you using it constructively to help bring down either your own mortgage, or are you looking to get into the market? Planning to do something like that, I think, is really important, and understanding that something may happen in the next 3 to 6 months, but what are we going to do with that is really important, I believe.
And I think it all starts with a conversation. So it's good to talk about areas and it's good to talk about what's about to grow, but understanding your position financially, what you can and can't do is so important. So Reventon, we believe in having a no obligation free consultation, which is a discovery session, which can unearth exactly what your capabilities are, what you're comfortable with, and then have a look at what properties will suit your needs. Because as Zen said, one rate reduction is great. When you get a second or third, people start to really understand that it becomes more real and they start to look at it. Buyer sentiment becomes stronger. And I think we've got a lot of great signs. We're heading into 2025 with a lot of optimism and a lot of confidence when it comes to real estate in Victoria again. And we're seeing a lot of great signs, especially with this Mitchell Shire. So I'd like to extend the invitation for everybody to scan there to get their free Mitchell Shire report and book in for a consultation with Zen, his team, to see exactly what we can do with the discovery session to unearth exactly your borrowing capacity, what you're comfortable with, what you should be looking at. And Reventon would love to have a chat to you.
Okay. So just remind everybody that there's an opportunity now for the next 20 minutes or so to have your questions answered. Any specific questions you have about what Zen and Chris have just been talking about, or about anything that's on top of mind for you regarding real estate, whether it's borrowing capacity or whether it's about questions about locations that are of interest to you. Please give us your questions. You can type them into the Q&A panel or the chat box, and we'll do our best to answer as many of those questions as we can in the next 20 minutes or so. Just while we're waiting for that to happen, gentlemen, just interested in having a look at some of the stats at more ground level for the area that we've been talking about, Mitchell Shire. Firstly, median prices. There's 5 major towns in Mitchell Shire: Beveridge, Broadford, Kilmore, Seymour and Wallan. And some of those places have median house prices well below 600,000, something that's very hard to find anywhere in the greater Melbourne area. So it has that level of affordability. The most expensive of the towns has got a median price around 650,000, which again is very affordable and attainable compared to greater Melbourne. Also very low vacancies in most of those towns. Several of them have vacancy rates below 1%. The other thing that strikes me is their long-term growth rates are quite strong, even though that Melbourne and regional Victoria hasn't had a lot of price growth in the last 1 to 2 years. Longer term, looking at the performance of these towns, Seymour is averaged around 9 or 10% over the past 5 years. Kilmore around 7 or 8%. So those are very good growth rates. You'd be very happy as an investor if you owned a property that you bought at an affordable price, and it was growing at those sorts of rates on average over a 5-year period.
Yeah, I remember a few years ago we were selling 4-bedroom homes in Beveridge, and they were like mid-4s. So they've obviously done very well. It was quite a few years ago. We sold quite a few properties in Beveridge. There wasn't as much going on there at that time, but we thought it's going to be very primed for growth. It was a 4-bedroom home. We were selling them for very good price, and they were getting 500 rent even back then. So
yeah, I think the rental statistics as well have been great. 12-month change as well. They've all been above 5%, and some it's close to 10% as well. So that's seeing that those growth statistics in rental as well. It has also been quite good, considering some of the other inner areas didn't receive that sort of growth as well.
And I think what we're looking at when we're looking at real estate in this particular pocket, this particular area, we're focusing on capital growth, cash flow and tax savings. When you're looking at this market, it's very strong in all 3 of these fields. And it's not easy to find a piece of real estate that's affordable, that's new, which offers maximum tax deductions, but also has great cash flow. So I think it's very important when you're getting into the property market. It's predominantly if it's your first investment property. I think I always say it's the most important, because the stepping stone to buy your second, third, fourth and fifth. Because if you don't over leverage and you buy the right property in the right area with the right tax savings, what that allows you to do is buy another property sooner. and then another property sooner. And that really allows you to compound and build your wealth. So when we look at all these areas that we're looking at and we discuss, we really look at the fundamentals and the macros of all these three components. And as you mentioned before, Terry, with the low vacancy rates, and you're looking at still good growth rates, it actually makes it very, very exciting for our investors to be considering.
Yeah. We're suddenly inundated with questions, as I expected we would be. And the first one was asking a question that we get asked questions like this all the time. I'm not sure how you answer it in general terms, but the question is, what suburb of Mitchell Shire is best for an owner-occupier? I imagine it kind of depends on the individual, Chris and Zen. What do you think?
Well, look, we always say it depends on we always talk about the discovery being the most important. It depends on the affordability of the individual. So there's a lot of, it depends. Is it $1 million? Is it 800? Is it 600? So it really depends on their borrowing capacity, which you need to ask a lot more questions to give an accurate answer to a question like that.
Their employment, where they're actually working, their travel time.
How many more years do you plan to be in the workforce? Do you have children? What's your bad debt? What's your good debt? So it's a very, very hard question to just give an answer to without asking more questions.
Lifestyle. What lifestyle are we attracted to?
What's your net disposable income? What's your risk tolerance? That's why that first meeting is so important.
And that emphasises the importance of taking advantage of that that special offer. And we'll put it on the screen again before we finish the broadcast so people can take advantage of it.
And I do want to answer every question that comes our way, Terry. It's very, very important to me, but I do want to give good information and I'll give actionable tips that people can go in there and actually work with. I don't want to say this is the best suburb. Someone without the right borrowing capacity buys there. I prefer to understand what their borrowing capacity is, what they're comfortable with, and let's have that discussion then with the data in front of us.
Okay. So Peter's asking, would you consider a townhouse as a good investment in this area?
I think with median house prices growing significantly and lifestyle, people's lifestyles now changing, different generations are looking at different housing solutions. I think median density has probably something that is going to become more common in the next decade than it has been previously. And the reason being is affordability for land, construction costs, and all of those sorts of things as well. So I do think that there is some huge uptick for medium density. And from what I've noted, probably in the past 2 years, sort of really looking at that medium density space, we have started to see some of those medium density homes even outperforming some homes on larger allotments of late. And that hasn't been something that's been prominent probably a decade beforehand, but it is starting to, I think the sentiment is starting to change now as well.
I think further on what you said, and it's very, very important to notice, it is becoming a lot more prevalent, but a few tips to look for is if you're looking at a townhome, which is good because you can also get it as a one-part contract, which means you put a 10% deposit and settle later. So it's easier from that perspective. See how many there is. They don't look exactly the same. If there's an owner-occupier rate and they're not all sold to investors. So these are certain things you should look for when it comes to picking a better investment. So as an example, if there's 10 townhomes built side by side, how many are sold to investors? How many are owner-occupiers? Because that's who you're competing against when it comes to finding tenants. That's who you're competing against when it comes to selling. So making sure that has a point of difference when it comes to these townhomes. The main reason, as Zen said, is affordability. If the median house price is in the area 600,000, you might buy a townhome for 500 or early 5, so it's easier for people to get into the market. But again, who's the builder? What's the owner-occupier rate? Do they look different? What's the point of difference? They're the things that I really want people to understand and ask.
And Terry, you've been doing this for longer than both Chris and I collectively now. You obviously have seen a shift in that. What are your thoughts on that, the shift in the marketplace there?
Towards attached dwellings, yeah, definitely. I think it's one of the most significant trends of the last 10 years across Australia. It really is a momentous shift in the market, and the dominant paradigm of real estate has always been that houses on land outperformed units and townhouses, but we've seen that change quite dramatically because more and more people are opting for attached dwellings, not just for affordability reasons, but there's all sorts of other reasons that lock up and leave, lifestyle, low maintenance lifestyle, safety and security, people feeling more secure, with crime rates, being in a secure building on the, further up from ground level. So all of those things are factors, and I think the official stats show that last year units in townhouses outperformed houses on capital growth in more than 60% of Australian suburbs.
And you look at tenants as well, that it's easier to maintain a townhome than a house as well. So there's so many benefits.
I think developers have really come to terms with the fact that there will be growth in that medium density space, and looking at townhomes these days. So on a smaller allotment, maybe a larger dwelling, would generally the dwelling would have taken up 40 to 60% of the land allotment. These days, that is starting to change with medium density, and the townhomes where they don't have many body corporates and things.
So just a connected wall in essence.
Yep. So no, they're not sharing walls, but they're homes that could look like a townhouse. No body corporates; they're on their own individual titles. So things like that have definitely the market. There's been a shift in the market, I think, when it comes to things like that as well. And as you would have seen with the growth rates that probably weren't there a decade ago in a similar sort of product sense.
Okay, James is asking, do you have any insights on the Geelong corridor stretching down from Melbourne? Do you feel there's a similar trajectory to the northern one that we're talking about today, and what do you see as the catalysts?
Yep, so that's a great question. We actually did a webinar talking about second wind markets. So if you want to jump on to the Hotspotting YouTube channel, you can see where we did speak about areas like Geelong, that Bendigo and Ballarat areas seeing their second wind, and we believe that there's definitely some growth to happen in those areas as well.
And just commenting on that, I think we're very versed in that area. We've been investing in Geelong and putting our investors in Geelong for over 10 years, since 2014. So we saw all these 4 indicators that we were discussing today as well. So we've had clients make so much money in the Geelong area. We also look after quite a few hundred properties in Geelong, our property management division. So we're very, very familiar with that area. And we do think it's seen amazing growth. Our clients made great money. But as Zen said, we do believe that it is going to have a second wind as well. But just to give you an example, I remember we were selling homes early 400s, 420,000, 4-bedroom homes back in 2014 that were renting for 450, 460 a week, which went up to 750,000. So that is a great area, and our clients have made a lot of money, and we do believe that, as Zen said, there's going to be a resurgence in that area as well.
And the last 12 months, we've actually taken on some builders advocacy as well, and that's been prominent in the Geelong Shire, where we've looked at some older homes where we were able to do some renovations on those homes, increase the livability there, maybe add an extra bathroom, an extra bedroom to the dwelling, and that's obviously helped with our clients building some equity in that as well. So another good space that we've moved into over the past 12 to 24 months, and some of our clients have really benefited from our builder advocacy service as well.
I would like to say, and furthermore to that, they're all great questions. What's the best suburb as an owner occupier? Shall I buy a townhome? Should I look at Geelong? All of these things should be, a lot more questions need to be answered. So it's so important to take us up on our offer here, to have a 30-minute no obligation conversation where we can really unpack exactly what you're trying to achieve. We can look at your asset liabilities, and we can really see exactly what's the best investment for you. Why are you looking at this area? What's your borrowing capacity? So these are very, very good questions. So please go speak to a professional company that knows what they're talking about, that can really help you, and would love to be that company.
And obviously there's a lot of strings to our bow. We're not just looking at new construction, obviously with building advocacy, with our buyers advocacy arm as well. We're really looking at tailored solution for an individual. So that's why, again, just to reiterate on what Chris said, having a chat, that discovery session really allows us to unearth what your goals and objectives are, and let's see if we're the right organization, the right fit for you guys.
Okay, just looking at a few further questions. Peter is asking about the suburb of Craigieburn, also up in the north of Greater Melbourne, not quite in Mitchell Shire, but another one of those northern growth areas. Any views on that one?
Again, I think the areas of Craigieburn have seen some significant uplift as well. A lot of infrastructure has gone into the area of Craigieburn, a lot of new schools in the area. Connectivity to the freeway has been fantastic. A lot of different sporting grounds, shopping centres. There's employment hubs there are also significant, and it's very close to the Mitchell Shire, probably neighbouring suburb to the Mitchell Shire. I think it's the Hume Shire. Yeah,
and Hume is another tremendous growth area. Some of the suburbs are more well established, but there's also high growth areas like Sunbury. I think it's another one up in the north. It's all part of that trend with Melbourne sort of spreading north as it grows and grows. Stefan is asking, for high population growth expected, what are the demographics of the incoming population? Is it likely to be a younger cohort family formation? Any thoughts on that?
I would have thought there'd be a mixture of all.
It's a very good question, but based on you looking at what they're building, I would say that they're families that are moving into the area. Obviously, not just with the Melbourne Victory Park, but all the infrastructure they're spending. I would say they're young families. But that's a very, very, very good question.
I think a lot of the people who moved to areas like these are looking for lifestyle to a certain degree, but also looking for affordability, and that would tend to be that, younger cohorts, younger families getting started.
I wouldn't know the macros to that question exactly, but based on the data that we're reviewing and looking at, I'd say what me and Terry just said.
Okay. Just referring back to the question about townhouses and our response to that, that's a comment that has to be weighed up against the cons, increasing body corporate fees, sinking funds, etc. But for small unit development townhouses, I don't think that's so much of a factor.
Yeah. So what was the question?
Suggesting there are problems with attached dwellings.
Of course, yeah. So basically, you've got to look at all the amenities. So when you look at large townhouse developments, and if they've got pool, if they've got common areas, what's their sinking funds like? How often do they do a bit of maintenance to the properties? These are things that are very, very important that you look at. But like Zen was saying as well, if there's a few dwellings, they're not as much, or they're minimal. But you've got to also consider that also covers your building insurance as well. So there's a saving as well. So there's a lot of factors to consider when it looks. You should do your research on the body corporates and their sinking funds. So when you look at buying a property, you should do a property investment analysis spreadsheet that has these figures in there. So when you're looking at buying a property, what are the body corporate fees? Is there a sinking fund? These are very, very good questions. So by coming and speaking to a company like us, we will know the answers to these questions. We'll put this information in your property investment analysis spreadsheet and pass that on to you. And I will also always advise to allow a buffer. So if things do go up, so if you look at in Brisbane, when there was natural disasters, the body corporates went through the roof because the insurances went through the roof. So these are all the things that can happen. And they were 1 in 100-year floods, whatever the case was, but it did impact investors. So these are things that you need to be aware of. That's why it's even more important that you speak to a company that deals with this stuff all the time.
Yeah, and understands it. And Terry, up there on the coast, you guys are bracing for what could be one of the largest storms that they've seen for how long now?
Well, it's the first time ever that a tropical cyclone has ventured this far south. That's what the big issue is. Normally they're a problem for North Queensland, but yeah, it's impacting. It's about to impact Brisbane, Southeast Queensland, and also northern New South Wales, places like Byron Bay. So all those things have an impact. Very unlikely to ever see a tropical cyclone impacting Mitchell Shire and Victoria, I'd imagine.
Probably not.
There you go. That's true.
Yeah. Look, we're almost coming up to the hour. We do try to finish within the hour because we're mindful that people tune into these events during a lunch break and need to get back to work, perhaps. Just recapping on everything we've talked about. Thanks, Sen and Chris, for a very informative discussion. I really like the topic. Mitchell Shire and that Northern Growth Corridor is one that we've been tracking for some time. It's one that we've included in our hotspots reports many times because of all those growth factors that you've talked about, plus the affordability, the proximity to major jobs nodes, all of those things make it an area that we think is worth considering. Just urge people who, particularly those who had specific questions about locations, and whenever I get questions like that, my response is, well, the answer depends on the individual. It always depends on the individual. What's the best place to buy? Well, you've got to have 6 people ask that question. There could be 6 different answers depending on their circumstances. And the best way to get that answer for yourself is to take advantage of the free discovery meeting and have a chat about your circumstances and start to develop some answers to the questions. What's the best thing for you to do?
And I think our goal, sorry, Terry, our goal as an organisation is to provide a tailored solution.
Yeah, I think that's it's always necessary for anybody to have a solution. The answers are going to be different for every individual depending on how old you are, how much you earn, what you already own, what your risk profile is. All these different factors play into it. So it costs nothing and only 30 minutes of your time to get some substantial answers to the questions that each individual might have. So I do encourage you to take advantage of that offer.
Thank you very much, Terry, for having us. We always enjoy talking real estate with you.
Yeah, it's always great talking to you, and as I say, I very much enjoyed talking about this topic because it is one of the spectacular growth areas and future growth areas of Australia. Let's do it again soon, gentlemen.
Have an amazing day. Thank you to everyone for listening.
Thanks,
okay. Thanks, everybody.